The $1,400 checks in the latest stimulus bill are stealing all of the limelight. But parents, you may actually benefit more from other provisions. The American Rescue Plan Act is only halfway to the finish line, but there's so many Easter eggs in it, I have to talk about it today. Namely, the expansion of the child tax credit. Now, this credit exists today, but the bill, as it has passed the House, does expand it generously. It makes 17-year-olds eligible. It also increases the credit from $2,000 a child to $3,000 a child, or even $3,600 a child if they're under the age of 6. Now, this credit is refundable anyway, but a really unique provision in this bill is where they allow parents to actually receive an advanced monthly payment of the credit. That means parents, you could receive a $250 monthly payment from July of this year to December of this year in advance for this credit. That expands to $300 per child under the age of 6. So if we were to put it into perspective, if you're a family with 3 children ages 12, 7, and 5, you could receive $800 in monthly payments for the second half of this year. And that's only half of the credit. The rest can be claimed when you file your taxes. Now, this child tax credit is not to be confused with the child care tax credit, which TurboTax claims is the number 6th most missed credit on tax returns. This too is in existence, and it's where we as parents report how much we are paying for child and dependent care expenses, babysitter, daycare, summer camp. Generally speaking, we're allowed to deduct about half of that expense on our taxes. And historically, it's been limited to $3,000 a child or $6,000 for 2 or more children. The expansion of this credit now makes this a potentially refundable credit, meaning we would get money back. It also increases the limits to $4,000 per child or $8,000 for 2 or more children. Now, both of these tax credits and expansions are only eligible for families under a certain level of income, but it is still a fairly high income amount, particularly for those single parent households. Now, as I said, this bill is only halfway to the finish line. It still has to pass the Senate, and it does not necessarily have a lot of Republican support. So Democrats are resorting to a strategy called budget reconciliation, where they only need a majority to pass. And it is possible it could pass in its current form. Much is still to be seen, particularly if the advanced monthly payments will pass this budget reconciliation strategy. But that's not keeping those of us who are parents from looking forward to our payday. I will say, opponents of the bill are slamming it for its pork spending. Even the editorial board of the Wall Street Journal is calling the bill out. It is estimated by experts that less than 10% of the funding is actually for direct COVID relief, and only 1% of the funding is for vaccine development and distribution. But hey, when the headline is all about child tax credits and stimulus checks, mine included, it's easy for us to miss that $470 million that's going to museums and arts and humanities. But hey, somebody had a good lobbyist. That's it for this week. This is Jeannie Fisher, the 401k lady.